All right, so good morning, everyone. Welcome to the Macro Snapshot. We'll do a fairly quick one this morning. It is Thursday, May the 1st, the beginning of the month. End of the month flows are over. 2025, of course, recording this about 7:30 in the morning. Okay, guys, so let's have a quick look and see what happened overnight. First of all, there was interesting stuff over the last kind of 12 hours or so. First of all, let's have a look over at Japan. We had a pretty important Bank of Japan meeting. They did not hike interest rates. There was no surprises there. I'm just going to bring up the Japanese yen here as a kind of a reference here. What the Bank of Japan did do was to have a lower than expected real GDP forecast. They also lowered their core CPI kind of estimates. So basically, lowering growth and essentially talking about, sort of global uncertainty from where. Also, they lowered their core CPI estimates. So the point is there, the market got a little bit nervous and essentially took that as being quite dovish, sort of a low growth, low inflation kind of story. And you can see here that the dollar actually has gained quite a lot against the Japanese yen. However, in the press conference, the governor, Ueda, he said, listen, the fact that we've lowered our kind of, well, basically we've delayed our, the period, the point at which we think we will achieve 2% inflation. So remember that the Bank of Japan, they have a 2% inflation kind of goal. And the idea is that they're going to continue sort of hiking, unless they get there. So the point is that he's basically saying that the fact that they've changed some of their growth outlooks and in core inflation estimates does not necessarily mean a delay in hikes, does not necessarily mean a delay in hikes. So the thing is there that, the US dollar has had a bit of general strength and the US dollar strengthening against the yen. But Ueda, as I just said, was at pains to say that, hikes were still, in their plans at some point. But the reality is, as long as the tariff sort of uncertainty exists, it seems difficult to think that the Bank of Japan will be in any mood to hike dramatically anytime soon. So in terms of the markets here, what we've got two fib levels here. One here about 145.2 here. Then you've got the longer term one, which is a little bit further up. So the point is here that if you're of the camp that, the US dollar should structurally weaken or could structurally weaken over the next 2 quarters, starting to get up to some interesting levels. Certainly something up here would be very, very attractive. So we'll see how it's going, but that's a little bit of weakness there. The other things which is kind of important overnight is that we did have some stock earnings yesterday. A lot of big companies, of course, we had Meta and Microsoft. Microsoft especially had pretty strong earnings and quite strong forward guidance. Meta was quite reasonable as well. Qualcomm's guidance was not quite as good. But the point is that the stock market is suddenly thinking that, there's sort of positive rumblings coming from the White House in terms of possible trade deals. So we had the US Trade sort of Commissioner Greer giving a mixed bag, basically saying in terms of Canada, saying the new Prime Minister Carney was a quote serious person. So it looks as though the White House is going to be treating the Prime Minister of Canada and Carney with a little bit of respect. So who knows, we could be some kind of deal happening there. In terms of other countries, Bessent and Greer and Trump himself have been saying that deals are relatively close, maybe a matter of weeks, with countries like India, Japan, South Korea. So they're trying to sort of push out this narrative that deals are complicated, but you're making progress. In terms of China, the Chinese, there's a lot of sort of commentary and talk and gossip and rumors going around that the Chinese are actually going to do absolutely nothing. They're clearly not negotiating directly with the Americans, and the Americans have more or less admitted that. It seems that what the Chinese plan is possibly is to wait until July the 8th, which is going to be that 90-day reprieve period. Remember, Trump gave everyone sort of 90 days to sort of get their act together. And it seems that the Chinese might wait until that period and just see how the US government reacts and Trump reacts. So I don't know that there's going to be too much sort of positivity coming out of China. But basically, there was enough sort of positivity. The fact that the US dollar had a bit of a rebound. There seems to be a bit more coherence coming out of the White House. And the data yesterday, we did have some interesting data. So we had the first quarter GDP, which was negative, actually 0.3. But on the other hand, you had personal spending and personal income was quite robust. So the way the White House is trying to spin this is to say that this is a bit of a leftover. There's going to be a period of adjustment. We're working on deals. People are still spending, and still the narrative seems to be this whole kind of disjointed sort of connection or lack of connection between people's sentiment. So we're seeing the soft data and the sentiment continues to remain weak. But as I said yesterday, if you look at real personal spending, actually it's quite strong. So in the real economy, people are maybe still, sort of spending money, and the jobs report is not too bad. Although yesterday we did get an ADP report of about 65,000. So it's kind of a little bit mixed at the moment, certainly not disastrous. What we have today, just to actually sort of look at the data, kind of interesting. Well, first of all, we have some earnings this afternoon. We have Amazon and Apple reporting. So again, what the market is sort of thinking is that, well, we had a Microsoft and Meta, which was quite good. Qualcomm was okay. There's been some negativity, but still the economy is kind of chugging along. And if, for example, Amazon and Apple it continues to signal that AI could be a sort of a boost to productivity. There's still plenty of capital expenditure, capex spending on artificial intelligence, and actually that they're doing quite well. It's providing a little bit of positivity for the market. In terms of what we have today, have the Challenger job cuts. They came out just a few minutes ago, so it's 62.7. So that looks like a lower number there. That's interesting. And then for the initial jobless claims, which I continue to say are very, very strong. So if you actually look here at the 4-week moving average, and just to put this into perspective, I just want to quickly bring this up. So just give me a few seconds here. I'll bring this up on this page. Oops, Echo US. So the point here is that if you look at the job situation, and the one to look at is the 4-week moving average, because that smooths it out a little bit. Let's just put it up here. Yeah. So what we can see is that there is a bit of variation. But if you actually look at these numbers, 220,000, 225, 230, this is still evidence of a very, very, very strong, sort of market. So if we go back, let's say 5 years, I mean, obviously this is the COVID situation, but let's say we just sort of smooth it out a little bit after COVID, once that all sort of came down, you can see here that we're in a very strong and flat kind of sort of situation in terms of the initial jobless claims. So, it's very tempting to sort of forecast and say, well, Trump's tariffs necessarily will lead to a slowdown, which will necessarily lead to a weakening job market, which will necessarily lead to the Fed cutting dramatically. And that's all very possible. And there are some indicators that, certain parts of the economy are slowing, and the job market here and there is showing some cracks. But the reality is, if you look at the hard data, and this is the initial jobless claims, so people who are filing claims for the first week that they've been unemployed or made redundant, made unemployed. The reality is, as you can see, it's a flat line and still at a very high level. Recessions are in the 300,000 and 400,000 historically in the US, plus 300, even up to 400, 450, 500. Okay. So the thing is here is that we have to all just sort of say, well, at this point, the stock market, the earnings have been reasonable. There's a lot of confusion. There's a lot of uncertainty, and sort of big picture, could things all break down? Absolutely, absolutely. But just at the moment, on the 1st of May, that is not exactly the situation here. Let's have a look here. We have Eli Lilly, the pharmaceutical companies, just reporting financial year adjusted EPS 20.78 to 22. Okay, so it looks a little bit lower than expected. Interesting. So there are some cracks, but the point is when and how that's going to happen is really the issue here. So let's keep a lookout on initial jobless claims this morning. Now, again, getting back to the Oh, sorry, I just had a big noise in my ear. Just getting back to the sort of survey data here, we have ISM manufacturing here. Again, expected to come in sort of lower than last time. Last time was in contraction territory at 49. Expected to come in even lower. Prices paid expected to go up. So will we get that sort of stagflationary thing? Because yesterday we did get a higher than expected PCE reading. So is this idea of stagflation? It's possible. It's possible. There was a little bit of evidence of that yesterday, that PCE remains sticky. And the GDP remains a bit low. Let's have a look today and see what happens with ISM prices paid. New orders always very important. 45 is expected. Unemployment. So let's look at ISM. Again, it's survey data, and let's keep in mind the survey data has been a lot weaker than the real concrete data. Let's keep all that in mind. So anyway, so we're getting that at 10 o'clock. A bit on construction spending as well. So just getting back to the markets here. Let's just have a look and see. So obviously, the S&P has had a little bit of a bounce up, but we're getting to some quite critical areas here. So first of all, we had this little box. I don't know if you can see it here. This box is when Trump on the futures announced the tariffs, and you see it gap down. So we're now almost filled that box, and that would indicate, a certain amount of positivity. We're now also, just from a technical perspective, at the 61.8 fib retracement from this the whole move. So that's quite important. And now we're also facing a confluence here of the 100 and the 200-day EMAs, exponential moving averages here. So we're starting to come up into some quite serious resistance, not only technically, but also I don't know, I don't want to say sort of psychologically, but also to say, well, hey, does the stock market want to be higher than the point at which Trump announced the tariffs? I think that's going to be difficult. I mean, could that happen? It could. We could get suddenly into a Goldilocks situation that actually the real economy is staying, okay. The market believes that sort of trade deals will eventually come, and eventually these tariffs will be a lot lower than initially stated by the White House. AI is going to give us a short-term productivity boost. Capital expenditure, especially in AI, will remain robust. The global economies elsewhere will actually stimulate with fiscal stimulus in Europe, in China, so there'll be less of a hit there. It's possible, but as I say, we are running into some serious resistance. And personally, I've put up a little red box here, which I think at least at the very minimum would represent sort of an attractive risk reward for sort of put spreads, maybe 2 or 3 month long put spreads. That's my personal view. So that's what I'm looking at up here. Volatility, we had a bit of a spike yesterday, as you can see here on the dailies on the VIX. That spiked just on that sort of lower than expected GDP number. But again, with the positive sort of earnings and sort of positive rumblings coming out of the White House, vol is down. I do believe that it is an interesting area, though, again, because again, this box here represents from April the 2nd to April the 3rd. This is the volatility, the Trump announcement kind of box, so to speak, the gap here. So again, I think if the VIX comes down to this sort of 100-day EMA around about a 22 or about 23 or so, at the very minimum, that represents a relatively cheap way to express sort of long gamma, if you want sort of long puts or long calls, but let's say long puts, that is certainly a lot cheaper than it has been recently. Although keep in mind, it's more expensive and is a bit more elevated than we've had, for many, many months. So it's still at a relatively elevated level. And I'm just thinking, my personal view again is that volatility below, let's say about 23, that's going to be difficult because again, you're going to a point which is lower than the pre-announce or the announcement of the tariffs. And one has just to ask oneself, should volatility be lower than that period? And my personal view is that doesn't make a lot of sense. Anyway, the stock's having a pretty good time. We are closed in China for a few days for a national holiday. We're closed in Europe today for the Labor Day or May Day's celebrations or holiday. So there could be a little less action than normal, a little less liquidity, and that's kind of interesting. We look at some of the metals, for example. We see gold having a big down session overnight. I remember I've been signaling that a lot of the support for gold has been coming in the overnight Asian kind of Chinese sessions. So who knows? Maybe those market participants not being active is just causing just not so much selling of gold, but a lack of active buyers. And this is probably a healthy retracement. Again, you had some relief for tariffs on car imports, car pieces, car parts coming into the US yesterday, and a general sort of a lessening of aggressive rhetoric from the White House. So it's normal also with the slightly stronger US dollar. It's normal that gold would take a pause here. So the real question is, when and if the buyers will sort of step in. Certainly this level here, this fib level of about 3,200 is going to be interesting, or even much, much lower at a 100-day moving average, which is a very attractive level, 2980. Not sure it's going to get down there. That's going to be an interesting one to watch. Silver also having a bit of a down day, just, again, some of the energy coming out of those metals. Copper is the interesting one. Copper yesterday, as we signaled, had a very big down day, bounced off the 200-day moving average, which was also the 50% retracement on the fib here. Again, without going into a lot of complex reasons, sorry for this interruption here with the charts. there's a lack of physical gold, sorry, physical copper in the Chinese exchanges, in the warehouses. There's a sort of a squeeze there on supply. A lot of the physical supply is going into warehouses in the US, based on the fact that there could be some kind of tariff placed by the Trump administration on incoming imports of copper. So it's going to be interesting to see if copper can sort of push higher, because if you step back and look at the global macro situation, there is, obviously a lot of uncertainty. So interesting to see that one there. We had a bit of a short on here, which we exited. But it's going to just be interesting to see if it has further to run. I think for the moment it might just sort of trade in a range. What is interesting in terms of commodities also is oil. Oil had a big, I think I can use the word puke here, downwards. If I can just find it, where's my oil chart? I think it's a bit higher. So you can see the crude oil here broke down. That actually did turn out to be a bear flag. Broke down. It's now retesting these lows around about $57 on the WTI here. And you can see this level here is a very important level going back there. Let's see, there's an interesting article today. What's going on? I'll just sort of point you to it. Those of you who have the Bloomberg, I think it's going to be on Bloomberg.com as well, by the great journalist on commodities, Javier Blas, which, yeah, so I just recommend this. Just came out. Those who want to read that, Javier Blas, Understanding the Saudi Push for Lower Oil Prices. Again, I won't go into the details there, but there are sort of various sort of also geopolitical reasons, structural reasons why the Saudis are not maybe happy that oil is going down, but reasonable, sort of okay with this situation. And one of the reasons that we had the big sell-off in the last day or two is because there was a sort of a sources story that Saudi's officials have been basically briefing clients and sort of people in the know that the Saudis are sort of can sustain, here's the quote, the Saudi Arabia can sustain a prolonged period of low prices. And this is possibly a message to within OPEC Plus, people cheating countries like Iraq, Kazakhstan, United Arab Emirates, who are overproducing compared to their quotas. It could also be that the Saudis feel, and this is Javier Blas's point, that maybe Moscow is turning a little bit more for a rapprochement with Washington. So maybe the Saudis feel that their sort of cooperation with the Russians could be coming to some kind of end. Interesting sort of things going on there, and also, of course, trying to squeeze the shale producers in the US, who, if you look at the Dallas Fed numbers, the average break even for the shale producers of crude oil in the US, it's kind of like, above $60, $65. So we're starting to get into a bit of an awkward range for those US producers. At these levels, they cannot make a profit, basically. And so it could be that the Saudis are saying, hey, we'll take a bit of pain for a few months here and try and squeeze a little bit some of those American producers to stop producing as much, and maybe even cause a few bankruptcies and sort of a shut-in capacity. Interesting point. But what I would say, though, is that although all the moving averages are moving over, and this is starting to look a little bit oversold, at a certain point here, if we see some kind of stabilization here, maybe even just another sort of dollar or two lower, this could be an interesting point for just from a risk reward point for a long. That's something I'll be looking at over the next day or two and just trying to figure out the situation. Keep in mind as well, in terms of OPEC Plus, the next meeting is on May the 5th, which is only 4 days away, 4 or 5 days away, May the 5th. Going to be quite interesting to see how they handle that. And normally there's kind of few leaks of stories leading up to that. So it's something also to be looking out for. So apart from that, guys, yeah, just a little bit of a risk on tone at the moment. Interesting to see where equities go. And again, it's an interesting situation technically, because if we suddenly get not so great earnings from Apple and Amazon and forward guidance, maybe that's going to turn the mood a little bit. Suddenly the ES at these delicate levels, not so great. If we get initial jobless claims, who knows, in 30, 40 minutes, which is higher than expected, not great. And then of course we have non-farm payrolls tomorrow. If that's negative, suddenly this sort of sentiment could turn. We also have European traders coming back in. After today as well. But at the moment, a little bit of a risk on kind of tone. Everyone's feeling, a lot more positive. But I just have I just think the next sort of points up on the S&P is going to be a little more difficult. We shall see. Okay, I'm going to leave it there. I want to prepare the day. Hope that's useful. We shall keep the conversation going. Thank you.